Good afternoon, everyone. Thank you for coming out this afternoon. We may have votes in about a half hour or so, and we may have to break, and we'll come back as quickly as possible. But I'd like to encourage all of you to please stay. If we have to go and take a vote, we'll come right back. And I want to make sure that we complete this panel discussion this afternoon. It's so very important. So I'm very pleased to welcome you to this panel discussion on the reauthorization of the Terrorism Risk Insurance Act, commonly referred to as TRIA. I organized this panel today because we're fast approaching the expiration of TRIA, which for more than a decade has been nothing short of a qualified success. TRIA supports critical economic growth by ensuring that our largest many businesses and employers have affordable access to terrorism coverage. This coverage is necessary to ensure that our economy is protected in the event of a terrorist attack. Following the catastrophic attacks of September 11, 2001, our nation suffered insured losses of $40 billion, the largest insured losses ever from a non-natural disaster. In the aftermath of this attack, many insurers and reinsurers began to exclude terrorism coverage. If coverage was extended, it was at a prohibitively high cost. In a rare showing of bipartisan cooperation, Congress stepped in to make sure that America remained protected. In 2002, Congress enacted TRIA to make terrorism coverage both available and affordable. TRIA requires insurance companies to offer terrorism coverage to commercial entities in exchange for a federal backstop, which is used to protect against only those terrorism-related losses that exceed $100 million. This structure ensures that insurers retain the cost of all but the largest terrorist attacks. The federal government's role in TRIA is simply to provide greater predictability to foster American economic development, job security, and growth. Now I'd like to stress that TRIA actually reduces taxpayer exposure because it keeps most of the terrorism risk with the private sector. Without affordable terrorism insurance, many buildings, schools, and venues would remain uninsured against terrorist attacks, meaning that in the event of an attack, the government would very likely pick up 100% of the tab. Furthermore, under TRIA, federal expenditures can be recouped through a post-attack surcharge. Without TRIA, the federal government would be exposed to greater losses with no mechanism to recoup its payments. The reauthorization of this important program is widely supported. The panelists before you represent only a fraction of the businesses, trades, and economic engines of our nation that depend on TRIA. Representatives from the insurance, construction, manufacturing, retail, transportation, real estate, and sporting and entertainment industries, just to name a few, have expressed strong support for a clean reauthorization of TRIA. As the expiration draws closer and insurance contracts are coming up for renewal, Congress must provide these industries the certainty that they need to continue to foster American economic development. Americans should rest assured that should a terrorist attack occur, their federal government will not leave them out in the cold. Now is not the time to make changes to a program that we know works. Now is the time for the quick, clean, and long-term reauthorization of TRIA. Let me acknowledge that I have a few of my colleagues here, Congressman Buster, Congressman Lynch, Congressman Capuano. Please turn around so that they can see you. Raise your hand a little bit. Okay. Thank you. Oh, Congresswoman Maloney, I didn't see you sitting there. Anybody else in the room that I have not seen, even with my glasses on? So let me take time to now introduce the panelists. I'm pleased to welcome 4 panelists that I'm sure will have a significant amount of insight into the importance of TRIA and the need for reauthorization. First, let me welcome Mr. Jeff DeBoer, founding president and CEO of the Real Estate Roundtable. The Real Estate Roundtable represents the leadership of the nation's top 150 privately owned and publicly held real estate ownership, development, lending, and management firms, as well as the elected leaders of the 17 major national real estate industry trade associations. Collectively, Roundtable members' portfolios contain over 5 billion square feet of office, retail, and industrial properties valued at more than $1 trillion, over 1.5 million apartment units, and nearly 2 million hotel rooms. Mr. DeBoer has served as president and CEO of the Real Estate Roundtable since 1997, and through a variety of positions, he has been at the forefront of legislation affecting the real estate industry during the last 30 years. Welcome, and thank you. Let me also welcome the President and CEO of Host Hotels and Resorts, Mr. Ed Walter. Mr. Walter joined Host Hotels in 1996 as Senior Vice President for Acquisitions and held a variety of positions, including Chief Financial Officer and Chief Operating Officer. He became the President and Chief Executive Officer in October 2007. Prior to joining Host, Mr. Walter was a partner with Trammell Crow Residential Company and the President of Bailey Capital Corporation. He serves on the Board of Directors of Avalon Bay Communities Incorporated and is a member of its Compensation Committee and is the Chairman of its Investment and Finance Committee. He currently serves as a member of the Executive Board and serves as past Chair of the National Association of Real Estate Investment Trusts. Thank you very much for being here today, Mr. Walter. Next, I'm pleased to welcome Ms. Molly Campbell, Deputy Executive Director of Finance and Administration at the Port of Los Angeles. The Port of Los Angeles is the #1 container port in the nation, and with its AA and AA2 bond rating, the highest rated U.S. seaport operating without tax support. Appointed in January 2007, Ms. Campbell directly oversees the port's contracts, purchasing, human resources, and information systems divisions. The port's chief financial officer is also a direct report to Ms. Campbell. Prior to her current position, Ms. Campbell served as the port's chief financial officer since October 2000. She also served as the director of the public finance with the city administrative officer, heading the debt management group, which manages the City of Los Angeles' overall debt portfolio. She was responsible for the city's lease financing programs, special tax programs, revenue bonds, wastewater commercial paper program, judgment bonds, and special assessment bonds. Thank you for being here, Ms. Campbell. Last but certainly not least, let me welcome the Director of Government Relations for the National Association of Insurance Commissioners, Mr. Ethan Sonnenschein, I believe.
Pretty close.
Is that good?
Good enough.
Okay. Sonnenschein, you pronounce it for me.
Sonnenschein.
The National Association of Insurance Commissioners is a U.S. standard-setting and regulatory support organization created and governed by the chief insurance regulators from the 50 states, the District of Columbia, and 5 U.S. territories. Through NAIC, state insurance regulators establish standards and best practices, conduct peer review, and coordinate the regulatory oversight. NAIC members, together with the central resources of NAIC, form the national system of state-based insurance regulation in the U.S. So please, everyone, join me in welcoming our very distinguished guests. You just joined by Congressman Heck. Please raise your hand and let me know who you are. Now I'm very pleased to acknowledge our guest and ask him to provide just a few minutes of opening remarks which can hopefully frame our discussion and questions for the panel. Let me just get started with our first panelist that I introduced, and let's see, Mr. Jeff DeBoer.
Well, thank you very much. The microphone is on, I assume. First of all, thank you very much for convening this meeting, and thank you to the members of the committee and others in the House who are here. This is a very, very important issue. As was referenced, I'm President and CEO of the Real Estate Roundtable, and frequently in my role, I'm asked how our industry, the real estate industry, broad-based, sees the current state of the economy. And we think things are much better. We're on the right road. The dark days of the financial crisis, we believe, are behind us. Financing is starting to come back. Jobs are starting to come back. And so while things could certainly be better and certainly be more positive, the arrow's in the right direction. And in that context, I'm also asked, what are you concerned about most? And setting aside, where the jobs are going to come from and so forth, when I talk about this, I sort of refer to two things. One concerns interest rates. When are interest rates going to rise and why are they going to rise? And number two concerns this issue, the Terrorism Risk Insurance Program. Because after all, if you're in the real estate business in any way, you need to have financing to do your operations, to develop, to refinance, to transfer the asset. And if you can't get financing, you're shut down. But you can't get financing if you don't have the right kind of insurance. And so this is a very, very important issue. We can't talk about when interest rates are going to rise or how they're going to rise, but you and your committee can certainly be very helpful on addressing the other main concern that we have, which is this issue. When will TRIA be extended and how will it be extended? Now, as reference, I represent people who are involved in the office and the hotel and the industrial and the multifamily space predominantly. But that's not all that this issue affects. This issue affects universities, it affects theme parks, it affects hospitals, it affects the ports. And so this is a very broad-based issue that goes to all of our economy. And it goes throughout our economy, not just in the large cities, New York, Los Angeles, Chicago. It goes across our country. Our industry has about $3 trillion worth of debt on our assets. Much of that debt involves these large assets, but a lot of it is also CMBS debt, commercial mortgage-backed securities debt. About $100 billion of it this year and about $750 billion that matures over the next 3 years. All of that debt, we're told by the rating agencies, requires all risk insurance. That means it must have access to terrorism insurance. Typically, the CMBS market finances what I think a lot of people in this town would refer to as Main Street as opposed to Wall Street. So again, this isn't about big buildings. It's not just about big cities. It's about America. Now, from my point of view, people say, do you like TRIA or not like TRIA, or what changes would you make? We're not in the business of trying to dictate how a product is made that we need, but we definitely need this product in order to do business. And our experience in this goes right after 9/11, and Mr. Walter will probably talk about what happened in the hotel business and his experience after 9/11. But from a broad-based point of view, in the 14 months after 9/11 and prior to the Terrorism Risk Insurance Program being put in place, we saw nationwide about $15 billion worth of transactions that were either stalled or completely canceled nationwide. President Bush and the Council of Economic Advisors took that information and translated that into job loss. And what they said was about 300,000 jobs, largely in the construction industry, that were lost in those 14 months. In the run-up in 05 to the extension, and the run-up in 07 to the next extension, we saw similar things, where transactions were being more difficult being financed, some were shelved, and the bottom line, the detriment, was to our overall economy and jobs. And so I would say to you that this is not a big city issue, it's an American issue. It's a way to help jobs and keep our economy going in the positive direction that it's now going. As was referenced, this is a very, we think, cost-effective way of doing business. Let's be honest, if we don't have a terrorism risk insurance program and then we're an attack, I suspect that members that are here today and throughout Congress would step up and rebuild our cities and help those cities get back up from $1 of loss. This is a program that stands in front of the taxpayer and provides roughly $40 billion of, if you want to call it, buffer capital. That's what it does. And so it's a very cost-effective program that affects a market that simply will not function, from our understanding, without it. one sort of final point, I guess. We view ourselves in the real estate industries as partners with Congress, partners with the Homeland Security Department, partners with local law enforcement officials. We're doing everything we can, building owners, to make our buildings safe, to make the people that come to work there or to stay in our hotels or to shop in our shopping malls safe. We have all kinds of redundant programs to try and stop terror before it happens. But let's be honest, it only takes one lucky terrorist to get through, and we have to be right every single time. And so this program allows business to go forward in the face of the terrorist threat, which has not lessened, even with the passage of time from 9/11. And it certainly will help the overall economy and specific assets rebuild if there was an attack. So I thank you very much. I thank your committee, and many members here have bills or co-sponsored bills. Perhaps everyone has co-sponsored one of these bills. We thank you very, very much. The sooner you can get this done, the better, because the more economic damage will occur the longer we wait. So with that, I'll stop and just thank you again.
Thank you, Mr. Walter.
Thank you, Congressman Waters and members of the committee that are here today. I would obviously echo a number of Jeff's comments relative to the importance of renewing TRIA. Host owns 140 hotels in 15 countries and 24 states plus the district, so we have a unique worldwide view on this problem. Today, though, as opposed to just representing our company, I'm here on behalf of the Coalition to Insure Against Terrorism, which is a consumer-oriented group that would like to see TRIA renewed. We really believe that renewing TRIA is important, really from a perspective of maintaining our economic security. And our company has a fairly unique perspective on this because we lost the Marriott World Trade Center Hotel in the attack of 9/11. So our hotel was destroyed when the two towers collapsed. Our Marriott New York Financial Center Hotel, which is located 2 blocks away, was also damaged by both the events of that day, and also was one of the scenes where firefighters were trying to put out fires because they were going into that hotel to get access to some of the other buildings in that area that were burning. So I think maybe even more importantly than all of that, we had 2 employees, and sometimes I'm stunned that it was only 2 employees that we lost that day. The Congresswoman noted that terrorist attacks cost insurers about $40 billion from that event. I guess the good news is, for those of us that had commercial insurance policies, we actually didn't lose that much. You know, we were essentially, other than our deductible, we recovered the cost of the building that we lost in that attack, and we were able to repair the Financial Center Hotel, and it is reopened. But the reality is after that event happened, despite the fact that there had been terrorist attacks before, it was clear that there was a risk of extraordinary damages related to terrorism events. And the bottom line was the insurance industry vacated the market. We went from, our policy fortunately didn't need to renew for a period of time, but in 2002 when we went to renew, we had no ability to get terrorism insurance initially. And finally, after a fair amount of work, we were able to get some terrorism insurance, vastly limited compared to what it was before. The price tripled, the amount of the coverage declined by more than 70%. A number of our buildings were far from fully insured under that program. I think the government ultimately did, and you all did the right thing by passing TRIA and providing a backstop, and as Jeff described, a backstop that sits behind a very significant private contribution in creating TRIA and provided us with some sense of security around these issues. Today, TRIA continues to protect both the capital and the property markets from disruption. One of the issues that maybe what isn't so apparent at first blush is the fact that most existing loans, in fact all of our secured loans, require that we maintain terrorism insurance. And they did back then too. When TRIA goes away, we will not be able to provide terrorism insurance. And so we and other borrowers will end up having to negotiate something with our lenders to deal with the default that would represent under our loan documents. When this happened back in 2002, and as this problem came up, we found that some of the rating agencies were downgrading billions of dollars worth of loans because those loans were no longer backed by terrorism insurance. We don't believe that the standalone market would be adequate to satisfy the demand if TRIA were to go away. And so we would face what I think the industry in general, and I don't just mean the real estate industry, I mean all industries, would face widespread technical loan defaults. We've also, at the most recent real estate roundtable meeting, we had an opportunity to talk with some of the major insurance companies and some of the major banks. And this topic was really front and center in our discussion at that meeting. And they made it clear that they were not interested in providing financing if the borrower could not secure terrorism insurance. This problem is here with us today. This is not a problem that starts on January 1st of 2015 if TRIA is not renewed. It exists today because as we renew loans, or as we renew our policies, we have to start to talk about the what if. So the reality is, and I think this is why you wanted to have the panel now and bring more attention to this, is that all we're doing is creating uncertainty and delay in moving things forward. It's an issue for existing financings, but I can tell you that for new construction projects, it becomes a bigger issue. Because any new construction lender is still dealing a little bit with the uncertainty in the economy. I would agree with Jeff, it's getting better, but we know this has not been a robust recovery. It's always a little bit of a trick to get a construction lender to want to move forward, and all we're doing is we're creating an impediment for that. And needless to say, that impediment is delaying finding those construction jobs, which is one of the areas in our economy that has lagged. The risk of terrorism has not gone away. The thwarted 2010 Times Square bombing happened right in front of our Marriott Marquis. The more recent bombing at the Boston Marathon happened 2 blocks away from 2 of our hotels. So we continue to be very much aware of this. And I would tell you that the lending community does too. The last point I would make is that I think the strongest argument for renewing TRIA is simply the fact that it's working and at virtually no cost to the taxpayer. We're asking commercial insurance providers to provide us with insurance. They bear the initial risk. And I think that extending the program in a similar form to the way it exists today is one of the smartest things we can do to make certain this recovery continues. Thank you.
Thank you. Ms. Cantone?
Good afternoon. Is that on? Can you hear me? Okay, great. Good afternoon, and thank you, Representative Waters and members of Congress, for this opportunity to testify on behalf of the Port of Los Angeles and all the affected agencies in Los Angeles region. Again, I'm Molly Campbell, Deputy Executive Director of Finance and Administration for the Port, America's largest container port. Among other duties, I oversee the financial management and the risk management for the port. The Port of Los Angeles, together with its neighbor, the Port of Long Beach, handles more than 40% of all the containerized imports entering the United States. In 2011, we handled approximately $311 billion worth of cargo. This cargo reaches every congressional district in the United States and supports more than 3.5 million jobs. We're not tax supported. Instead, our revenues are derived from fees from the variety of shipping services. I want to pause for a minute and just tell you a little bit more about the vital assets and the infrastructure that's key to the ports of Los Angeles. We're a diverse port. Again, we're the largest port in terms of volume. 8 million TEUs come, or what's called 20-foot equivalent units. Those are the boxes that you see that are transported, comes through our port. We have steel products that are 1.2 million metric tons. Scrap metal, 590,000 metric tons. Fruit of 101,000 metric tons. Autos, liquid bulk, and 426,000 cruise passengers and 98 ship calls annually. We have 8 major container terminals, 53 feet of water, which is very important in terms of handling the very large ships that come in, and 50 container shipberths. I say all of this because it's important for you to get a perspective of the critical infrastructure that supports not just the Port of LA, but the nation's goods and the cargo that needs to be moved. So we appreciate the purpose of this meeting because the renewal of the Terrorism Risk Insurance Act is critical to our competitive operations and our financial strengths. Insurance is a vital and necessary part of managing the risks that are associated with port operations, especially those risks that can result in a catastrophic loss. Terrorism is an example of that kind of risk. Because of the difficulty in determining the frequency, severity, and loss potential associated with an act of terrorism, we're concerned that insurance may not offer coverage that is effective or affordable. This was the case immediately post 9/11 and prior to the passage of TRIA. TRIA also requires that insurers offer terrorism insurance coverage even in Tier 1 target areas such as Los Angeles. Without TRIA in place, the current stability and widespread availability of terrorism insurance coverage in these areas would become more limited in scope and prohibitive in cost. That is, if coverage is available at all. The availability of adequate and responsive insurance coverage is primarily an economic problem. If TRIA is not renewed, the Port of Los Angeles would likely have to self-insure for terrorism, and this could result in a reduced bond rating, which would impact our services, our ability to fund our debt service obligations, our capital improvement projects, and the revenue at the Port of Los Angeles. The financial impact will critically impair our ability to rebuild, modernize, and most importantly, stay competitive. The impact is also not limited to ports. We have been in communication with other regional agencies, such as the Los Angeles Department of Water and Power and the Los Angeles World Airports. They too have expressed similar concerns regarding the availability and cost of terrorism coverage in the absence of TRIA. For those reasons, we support the extension of TRIA. We also support amendments that would include nuclear, chemical, biological, and radiological coverage. Currently, TRIA is silent in regards to that coverage. However, it provides coverage over insured losses, meaning that it would likely only provide coverage if the underlying insurer elects to provide this coverage. This leaves much to after the event interpretation. Amending the extension of TRIA to specifically include the nuclear, chemical, biological, and radiological coverage would address the most likely loss scenario and provides a heightened level of security. This concludes my opening statement. Thank you again, Congresswoman Waters, for bringing this to our attention and allowing me the opportunity to speak on behalf of the Port of Los Angeles and the other regional agencies.
Thank you, Mrs. Sanders.
Thank you very much. I'm going to sound a little bit like the last soloist in the choir here and echo pretty much mostly what my colleagues here have said. But first, thank you, Congresswoman Waters, for getting us together on this important issue. And thank you to the members for your interest in this topic. I'm here today to offer the perspective of the state insurance commissioners on the continued need for TRIA. The state regulators are tasked with ensuring the solvency and viability of the insurance industry. So I appreciate the opportunity to be here. TRIA is the best type of partnership between the private market and government, and that government's involvement in this instance creates the appetite for the private market to exist. To be clear, absent TRIA or some comparable solution, we do not believe insurance carriers will make available any meaningful capacity for affordable commercial terrorism coverage. Insurance is well suited for protecting against losses from events where one can make reasonable assumptions about the frequency and severity of loss. However, this basic concept of insurability does not apply to terrorism, where neither the regulators nor the industry possess the necessary insight or data to anticipate the frequency and severity of terrorist attacks or its impact on the insurance industry's solvency, I might add. Furthermore, policyholders lack sufficient knowledge to truly mitigate their risk. One can choose to drive poorly or choose to live in the path of hurricanes, but losses in the case of terrorism arise randomly, effectively from no fault other than being an American. If our government is the embodiment of the values that terrorists are attacking, it stands to reason that the government bears some responsibility to absorb the financial impact of an attack. The 9/11 attacks resulted in over $40 billion in total insured losses, of which nearly $25 billion was just property loss. This is greater than the average natural disaster losses of the entire U.S. P&C industry in one typical year. Insurers have a tremendous capacity, no doubt, to absorb losses, but they are threatened by what is known as a tail event, an event that is effectively off the charts in terms of its impact. What TRIA effectively does is remove this tail event risk, and by doing so, the private market can now manage at least one variable, severity, and make available coverage at reasonable prices. TRIA stabilizes not only the insurance sector, but the broader economy. Businesses and consumers that live and work and conduct commerce in areas that are prone to terror attacks benefit from the stability of the insurance sector, which participates only because TRIA is there as a backstop. Without TRIA, the industry would dramatically reduce the amount of coverage they'd be willing to write, and prices for terrorism coverage would be significant enough to curtail development and investment in many areas. Indeed, insurance regulators around the country are already being asked to review policy exclusions for 2014 contracts that will dramatically reduce coverage if TRIA is not reauthorized. This is not theoretical, this is reality. The continued and uninterrupted existence of TRIA is the catalyst that brings in the private market to absorb losses that they would otherwise choose not to absorb. If TRIA goes away, while I can't predict what Congress will do in the wake of the next terrorist attack, the question that would confront you all is whether you would ask taxpayers to pay for the first dollar of losses, or the first dollar after the insurance industry has absorbed over $27 billion. Thank you, and I look forward to your questions.
Thank you very much. We have a number of members of our committee that are present with us today. We've also been joined by Mr. Horsford, who came in, and another member of our committee, Congressman Green, who came in. I'm going to ask the members of Congress first to share their questions with us or comments. And before I go to Ms. Maloney, who is from New York and certainly has a lot to say about this, let me just thank Mr. Heck. Mr. Heck is one of those members who said to me, we've got to do more about TRIA. We've got to make sure that we get the word out. He was very surprised that there appeared to be some opposition or even maybe a lack of interest. And so I want you to know that we are organizing any number of efforts, and a lot of them had to do with you, Mr. Heck. So thank you very much. Ms. Maloney?
First of all, I want to thank you, Congresswoman, for organizing this, and all of your panelists for their insightful comments. And as a New Yorker who was deeply involved in the 9/11 recovery, the single most important action after saving people and trying to rebuild was TRIA. We couldn't build anything. The entire insurance industry left. And the only way we could get insurance anywhere was from Lloyd's of London in England. So until we got TRIA in place, we really could not rebuild. So passing this is tremendously important. And I have two questions for the panelists. There are some rumblings from the Republican side that they want to change TRIA. And I want to ask, are there any changes that the insurance industry will accept from the Republican majority, or should we just continue pushing for a clean reauthorization? And my second question is, even though TRIA does not technically expire until the end of 2014, we all know that insurers will start leaving if they get a sense that it will not be reauthorized. And I want to ask, how much time do you think we have before insurance companies start leaving the terrorism risk market? Do you think it'll be 3 months, 6 months? So that's my questions.
Why don't you tackle them?
Well, let me take a swing at both of them, I guess. The first question concerning changes to TRIA. Again, we're not necessarily in the, we're consumers of this product, so it's like asking someone how they want the car redesigned. We need a car that goes down the road and goes down the road effectively and appropriately and has the right capacity to hold all of our family. So is it right for Congress to relook at TRIA and see if it can be changed in some way, shape, or form to function better or more appropriately? Certainly. And there's nothing at all wrong with that, and there may be items that could be altered. For example, was suggested by Molly concerning NVCR. There might be issues concerning the certification process. There might be issues concerning cybersecurity. And so there might indeed be ways to make this bill, this law better and function better, and that's not for us. I will say that there are some disturbing ideas out there that concern us, and they talk of things like raising the trigger amount, maybe too high, maybe changing retention amounts that will have the effect of driving insurers out of markets. And the trigger amount may in fact drive smaller insurers out of some marketplaces. And again, we're not in the insurance business, but concentration of risk is a big, big thing for that industry, and so that might be something to look at. Your other question was really about when do we have to act, and when should Congress act, and is it affecting, when will it start affecting things in 3 months or 6 months or 9 months, I think was your specific question. And really, Ed can talk about this, but right now, in certain markets across the country, when people are getting new financing to either refinance an existing debt or do construction projects, it's already entering. And there are already being put upon policyholders this concept of a springing exclusion, which means that if you have a financing that tails into next year, then it's going to pop up as an exclusion, and you will no longer meet the covenants and demands of the marketplace. So bonds will be potentially downgraded next year, and so on and so forth. So the problem is with us now. It will only get worse as the year goes along. Congresswoman, you're from Los Angeles, but in a San Francisco sense, the fog is starting to come in. And it comes in and comes in with each day, and maybe we don't notice it, and maybe there's only 1 or 2 transactions today that are affected. But as the calendar and the days of the year push off, the fog will get so thick that pretty soon transactions have ground to a stall, complete stall, as we saw in 05, 07, and the 14 months after 9/11.
Would you please chime in on that, Mr. Sanchez?
Sure, and I think, you know, the availability of the product that Jeff is talking about is the important thing here. There's a point at which the industry will no longer make available that product. And, you know, the time to sort of resolve this, frankly, is now. But in terms of changes, one of the things that I think you have to be mindful of is if you adjust the triggers and deductibles, you are effectively narrowing the pool of insurers who are willing to write coverage. And one of the only thing they can do is diversify geographically, which means in big cities, you need a lot of carriers willing to write. It's a bit of a gamble. We don't have any information about terrorism. We don't know when it's going to happen. And so even the largest carriers in the world are only going to make available a certain amount of capital for terrorism, even with TRIA. And so if you raise, for example, the thresholds, you're basically limiting just only to the largest insurance companies to be a part of that pool. And so there's risk in that. But ultimately, I would think the insurance industry is in the best position to answer at what point do they feel like their solvency and their willingness to write are going to be jeopardized. And then from our perspective as regulators, if we feel like they are overexposed, we frankly just can't let them write coverage beyond a certain level. We will have to curtail their ability to do that, and we would rather not be in that position.
Thank you. We've been joined by Congressman Joe Crowley, Vice Chair of the Democratic Caucus, but he's also a New Yorker, and I think he may have a question or two or a comment.
Well, thank you. Thank you, Betsy, for holding that.
Yes.
If maybe it hasn't been touched already, you noticed I'm from New York. Can we dispel the notion that this is a New York City issue or just a big city, big blue city issue as well? I think that's, I think if some of the panelists can maybe address that issue.
Congressman, I totally agree. I mean, there have been some lists of foil terrorist plots around the country.
Yeah.
And despite the fact that the ones that have succeeded were in some major markets, you've got a potential attack on Columbus Mall, a concern about pipelines in Wyoming, a federal building in Springfield, Illinois, and a Christmas tree lighting ceremony in Portland. So the reality is that terrorism is certainly more than just a big city issue. It's spread throughout the country, and if you look at a map of prospective incidents, it looks a little bit something like those AT&T maps that they're publicizing on TV right now. And it's the whole country that gets outlined on where potential risk exists.
Just to follow up just briefly, Maxine, aside from the terrorism issue itself and the risk factor, that is with us now for the foreseeable, indefinite future in the post-9/11 world. In terms of construction, new construction, not existing construction, but new construction as well, can you give us a little bit in terms of your sense, in terms of the lack of knowing when and if TRIA will be reenacted, or for how long, and what impact that has on jobs in terms of construction trades throughout the country?
There's no doubt that there's an impact. I think in kind of listening to Jeff's answer to the other question, my guess is that for a while here, there's been a sense that the Congress could do what we, the industry, broadly speaking, not just real estate, but industry would think is the right thing, which is to extend the program. The further we work our way into this year without progress, the more the uncertainty is going to exist on whether the program is going to be renewed. The greater the uncertainty is that the program will be renewed, the more a construction lender is going to start to say when they're discussing a potential project, especially the larger ones that might, I don't just mean in a city, but big stadiums and new stadiums or those sorts of things, they're going to start to ask themselves, well, what's going to happen if this doesn't get renewed? And there flat out isn't an answer. I mean, the facts are there's not enough standalone coverage to begin to cover the risks that are out there. And so you're going to end up with every project being slowed while the bank and the developer or the business start to debate what's going to happen if this doesn't get passed. Now, there's no general rule of what's going to actually happen. Some of them are going to just move forward, but a lot of them are just going to wait, and they're just going to wait until we finally get a new program, and then they can evaluate what the new program looks like. And I think, looking at this, I mentioned at the beginning of my remarks that we own hotels all around the world. The interesting thing to me is I don't confront this problem when I look to invest or build a hotel outside the United States. We own 4 hotels in Paris. France passed a program that provides a federal backstop in the fall or early winter of 2001. England has one, Australia has one, Spain has one. Spain has had incidents too. So all these other countries have taken this risk off the table so that the economy doesn't slow every time we get to a renewal. I'm not going to ask for the ultimate, which is let's make it perpetual, but the reality is that when you're investing significant amounts of capital, and we've probably over the last 2 or 3 years have in some form or another, either a construction project or an acquisition, invested north of $1 billion to $1.5 billion a year. So I look at this on a regular basis. There's a lot of judgments that I have to make. The last one I want to have to try to fit into my equation is what is the risk of terrorism event? Because the reality is I don't care how much information I have, I cannot predict that.
Let me just add on to that. This is, the construction industry itself is not, in terms of building new buildings and so forth, not exactly what we would call booming right now, okay? So it's hard to say what this direct impact is. But certainly as the economy recovers, new construction activities should be driven and should come up as a natural part of the cycle. This will just be one more reason to wait. The construction industry right now probably has an unemployment rate right around 20%, I would guess, and certain parts of the construction industry are higher than that. Some of the allied, the trades, painters or carpet layers or glass glazers or what have you. And so this really does, Congressman, your point, I think is right on. This has a tremendous chilling effect on construction, not right now because people aren't really doing all that much right now. But as we continue to grow as an economy, there should be that natural pull to construction and more development activity and more jobs and getting that unemployment rate down in those sectors that badly need it. And this is just another reason for people, as Ed says, to say, well, we'll wait. And that's what we're saying about this. This is an urgent issue for a lot of users.
Mr. Foster?
In regards to the inclusion of nuclear, chemical, biological into the coverage, is there an idea of what that would do to the premiums, and is that an issue? And are, in countries, Or is it universal worldwide that those three threats are actually included in the coverage, or is that something that would be unique to the U.S. if we chose to do it?
Just offer that right now, nuclear is excluded from insurance contracts in general, even with or without TRIA. So to sort of put it into TRIA, I think you're asking the insurance industry to cover a peril that they, even with TRIA, are not interested in covering. So you would undoubtedly see premiums go up. Coverage would probably be constrained. They would be willing to write less coverage. And if I could, just to the Congressman Crowley's point is important, because this is not just a lender financing building question. You know, every employer in the country has to buy workers' compensation insurance and liability insurance. So this affects everyone. We've seen policy exclusions in like Rhode Island, the Dakotas. I mean, these are not exactly what you would think of as the hotbeds of terrorist focus. And the same insurers that are writing TRIA coverage are also writing automobile policies and homeowners policies in other areas. So this is, you know, I think it misses the point to think that this is just a sort of, you know, downtown urban area building issue. This is a national economy issue. But sir, to your question, MBCR does introduce a degree and scope of uncertainty that I think the industry, the insurance industry, is probably in the best position to answer.
Mr. Heck?
I actually have a question I'd rather put to the opponents of this legislation, but let me try and do it this way to the gentleman from the Insurance Commissioner. Would premiums be affected by a longer term reauthorization? If so, how?
I think the industry and the regulators want as long as possible. I don't see a future where the industry willingly writes terrorism coverage without some form of partnership with the federal government. So the longer the duration, the more certainty in the market. Over time, as people get more comfortable, premiums, we have seen TRIA premiums come down a little bit in the last couple of years, which tells me that the industry is growing a little bit more comfortable. So the longer you have that duration, you might see that continue to improve. And there are risk modelers out there who are trying to better understand frequency and severity. As that information improves, perhaps the underwriting there improves. But again, it's probably the industry is really in the best position to answer, you know, how much can they write, for how long, and what it premiums.
Longer equals better.
Generally speaking, yes.
Mr. Archwood, you have a comment or question?
Thank you
Yes.
to the ranking member, and I appreciate the indulgence in allowing us to participate. I'm from Nevada, and obviously hospitality industry is our #1 industry as part of our economy. Mr. Walker, what is the impact of the reauthorization of TRIA on tourism and hospitality sector development in particular?
Well, I think, you know, in line with a number of the comments we've made, the reality is that without TRIA being reauthorized, I think it has to have a dampening effect on the new construction of incremental hotels. And it has a dampening effect broadly speaking, but I think hotels would certainly fall within the industries that would be negatively affected by that. So I think it would be a concern. And I think you'll find it in other ways. I mean, the casino business, which has been, of course, remarkably successful in Las Vegas, has an ongoing need to continue to reinvest in those properties. You know, they run at very high occupancies, and they constantly need to be freshened up or reinvented. That doesn't happen without borrowing money in most cases, and that's going to take us down that whole path that we described in terms of the complexity of borrowing money in a non-TRIA world. So the effect, ultimately, from my perspective, is if there's less capital flowing to a business or an industry, you're going to find that it will be harder for them to renovate, it will be harder for them to grow, and you know that translates into ultimately less tourism and less jobs.
Thank you very much. Let me do something we don't normally do around here. Let me go to our audience and take a few questions before we wrap up. Feel free to raise questions or to give a comment. Let me see your hand. Yes.
Hi, how are you?
Would you please stand?
Oh, sure.
Yes.
Hi, how are you? I'm Erin Ager with Commerce Communications Office. We just have a few questions about essentially what some possible changes to TRIA might mean for the industry. And so first, I mean, there's a few things I think that are being discussed and that you all mentioned. Either one, raising the trigger rate to as high as changing the retention amount, and another possibility is pre-funding, requiring insurers to actually pay a premium to the government to have the TRIA backstop. Can you all just give an idea of how you think that will affect the industry, the availability of terrorism coverage? If that means there's going to be fewer insurers out there, that means there's going to be fewer policies, places where there's more concentration, they're not going to have access. Just give me your thoughts on that.
Sure. In particular, the retention level to me is the most important piece because that sort of determines who's in the pool of insurers writing and not. I mean, if you raise it too high, again, there's something like 7,000 insurance companies in this country, but 20 of them have the ability to write $20 billion in coverage, so you're really limiting the pool of people, and you're not spreading that risk out among a number of different entities. The trigger level is what I'd have to think about because that's more just when does this program become a reality, and the retention level in aggregate across the industry is something like $27.5 billion already, so that might be something worth thinking about. I don't know that really fundamentally changes the industry's willingness to write, but again, that's probably a question for them. The retention level is really the one I think that would really pick winners and losers and curtail the market.
And about pre-funding, does that mean any thoughts on
Pre-funding?
funding actually require insurers to pay some sort of a premium to the government for the backstop?
Again, I mean, that's I guess it's like a pre-recoupment. That may limit, again, the coverage. It may increase the pricing. I mean, the insurance industry is going to pass along its costs to its policyholders. That's just a fact of life. So it would depend upon, I don't think they're pricing in recoupment now, but that would, again, be a question for the insurance industry.
I wouldn't disagree with anything that was said about any of those items, but just in general, I would say that all of the things that you talk about will have the effect of reducing capacity and probably driving some insurers out of the marketplace if they can. And while I do agree completely that the insurers are the ones that should answer this, on the trigger amount, I think it's important to think about how that would affect smaller insurers. And the insurance industry is a lot about concentration of risk, and so you might have larger insurers who patchwork through an area, and there are little pockets of an area that are left outside of the larger insurer's market, let's say. And it takes the smaller insurer to come together and provide a full coverage for an area. And if you raise the triggers up too high, you, I think, would expose some of these smaller insurers and potentially drive them out. And I just throw that out there in terms of what is fair for that industry, which isn't mine, but I'm interested in making sure that all assets can get covered if they want to be covered and need to be covered.
We have with us Congressman Moran. We've had a good discussion here, and I know that you have an interest in TRIA. If you have any questions or comments you'd like to share with us at this time, we would welcome that.
I appreciate that, Max, but Chairman Waters, I should say. But I don't need to do that. We've got a vote coming. It's on right now, so I want to give you the maximum time to clear this up so you can get over the vote as well. But thank you for recognizing.
Discussion, and our panelists have been so good that they answered many of the questions that we have in their presentations. One of the things that several things have happened here today. Reauthorization is absolutely important, and that to the degree that we reauthorize sooner than later, we will take some of the uncertainty out of the whole question of whether or not there is going to be reauthorization. We know, and I was asked when I first came in, was I surprised that there was some indifference or maybe even opposition, and I said, yes, I am. And I've been around for a long time, and sometimes I'm pretty jaded about these things. But I am surprised that there's any hesitancy, any reluctance whatsoever to reauthorize this program. As a matter of fact, to me, it's about even patriotism. You know, do we stand for a backstop with our government in the face of terrorism. And I think that that's easily answered by most people. And so I think it's important for all of us who care about this issue to make sure that we get our comments in, that we get our emails in, that we talk to our legislators and make sure that they don't play around with this, that we get this done sooner than later.
Madam Chairwoman, I know that Jeff and Ed very much appreciate your leadership and your commitment on this. This is very important to a lot of sectors of the country, and obviously you're going to see that it gets done. Thank you.
Well, you're so welcome, and if we have no more questions from the audience, if you'd just like to wrap up, anybody with a wrap-up comment or sentence for our audience and for those who are listening, I would appreciate it.
I would just like to echo what has been said here numerous times, and that is the uncertainty factor. There's so much in life that we can't control, and there's so much uncertainty out there. But this is one of those that I think that if we can move sooner than later, that would be very helpful.
Thank you.
I think you two ladies have said it.
Would you give our panelists a big round of applause? Thank you so very much. We have completed the discussion a little bit sooner than we thought. We have a vote on the floor. Now you don't have to wait until we come back. It's all done. Thank you very much.